Alrighty, traders, this is Blake Morrow. You are listening to Face 2.0. All right, so we've seen, obviously the dollar. Oh, hold on really quick. Let me just make sure everybody knows. Really quick. Sorry, guys. Okay, so sorry about that. So let's talk about we just have inflation data come out. It was weak, which, I think all of us are like, man, I don't know if I see it, but what it did do is it kept the dollar under pressure, and it allowed for stocks to hit new highs. So that the outcome was expected. What we got for inflation data was more unexpected. So I didn't expect us I expected inflation data to come in a little stronger, to be honest. But that hasn't, obviously there's nothing that's going to derail the stock market right now. So, and I'm going to take a look at let's just go ahead and pull up the bias chart and get these numbers down here, because this is, where we're at right now. We are dealing with a stock market that is just continuous, continue to be bullish. And 3870 is obviously the breakout point. And while we're above that, we have to stay bullish. So 3870. Now, remember, Powell speaks a little bit later today. I want you guys to think about that too. That's obviously going to be a risk for the market is when the Fed chairman is speaking today. So just keep that in mind. All right. Let's look at resistance for, the S&P. So to get us to the 161% extension, which would be, we're already at the 127% extension. We're talking about a move up to the 161% extension, which I guess in essence would be a blow off top type of move. But look at this relative strength and look at how we're just paused at very overbought conditions. So, that's something that we do have to think about. I still, and by the way, this is actually more like this. Okay. So I'm going to write at this point 3996, or basically 4,000 for the S&P. Can you believe I'm saying that? My goodness. All right, let's go take a look at let's go to the euro dollar. So here's the euro. So the inverted head and shoulder pattern, as you guys know, we get to complete it at 2153. But let's make the assumption that we're going to break it. I think it's important to do that. 121.50. Well, it's 21.55. Let's just make the assumption that we're going to go past that at 122, which is the 618 retracement, just in case we, Powell continues to sink the dollar, if you will. Okay. So we are in a range, in my opinion, and dips now back to I'd say 121, but actually let's mark this number right here. Okay. See this support, resistance, support? That comes in at 120.90, and you can see the spike low. It's been an important number on the way down. And you can see this 4-hour chart right here, that spike low. It's important. So 120.90 is going to offer us support today. Okay. It's not too far away from where we're at. And so I guess what I should do is say, well, we have that and then 120.60 below that. Right? Okay. So continuing on. Let's go over to the cable. So here's the cable. This is, you guys know we're in a breakout, right? That's one of the main reasons I stay really bullish, like the pound New Zealand, the pound Aussie, and just so you guys know, If you didn't read the basic technical analysis of the pound New Zealand today, we knocked our head up against key resistance, guys. And if you weren't in the chat room, I'm going to say this to you guys that don't have access to the chat room right now. We break above 192, and I'm going to be adding to my longs of the pound New Zealand for a couple reasons, and then I'm going to get back over to the bias chart to talk about the sterling. But just hear me out here. This is the daily chart of the pound New Zealand, right? And you notice how we have this, breakdown of a multi-year trend line, right? Well, now we're coming back up to the underside of that trend line, and that is, and it has, let me go ahead. It's capped us, right? It's really capped us since December. Oh, I didn't mean for that to happen. Let me move that up just a wee bit. Okay. All right. So a break above 192 would be very, very bullish for the pound New Zealand. And with the sterling breaking out, okay, with the sterling breaking out, and I think the Kiwi and the Aussie are struggling, I believe that the pound New Zealand, pound Aussie have a lot further to go. Just letting you guys know. All right. And I think that the pound dollar is very bullish while we're above, especially while we're above, you guys know, while we're above this broken trend line here. But more importantly, I would say while we're above 137.60 near term. It's bullish, and obviously we're targeting 138.75. That's next. Okay. That's 161% extension. Let's talk about the Aussie. So the Aussie, oh gosh. Hey, Steve, are you here? Okay. Sorry. Steve and Stelios, I have somebody that just came to my front door. So, it's my wife's birthday, and her father, who she doesn't get to see, because of COVID. And he's 75. He dropped something off at the front door, so my dogs are going a little crazy. Sorry, guys. It's one of those days. Bear with me. All right. Going over to Aussie, and if you guys missed it, it is my wife's 49th birthday today. Don't tell her I told you that. Oh shoot, I wasn't supposed to say anything. I didn't say anything. You guys didn't hear it from me. You guys just guessed. It was a great guess, by the way. Just oops. All right. Alexander says congratulations to her. Yeah. Oh, I mean, I think every year, every year is a great year, and it's should be a congratulatory thing for everybody. Okay, let's get back to the market. Sorry, Aussie. So in my opinion, we're flirting with the channel resistance. I know I took a short in the Aussie.
Hey Blake,
dollar.
sorry, I was here, but I was on a call. Sorry.
Oh, that's okay. I was.
You still need me?
What? No, I'm good. We're good. I'll call for you in about 15-20 minutes. But thanks, Steve. So the Aussie dollar, I took a short at it yesterday, and then if you guys follow the patterns in play, I just closed it because we were knocking our head up against the channel resistance. And then by the end of the day, I'm like, you know what? We're probably going to push up in Asia. We did, came down, and then, we're kind of still flirting with it. I still think while we're below 77 cents, you've got to be more bearish than bullish. So I think that's going to be resistance today. And look, I know stocks are higher. I know they are. Chad said major faux pas. Raj says I heard 25. Didier said, gee, congratulates to her. Happy 49th. I'll let her know, you guys. Really, thank you. Okay, so going back to the Aussie. So the Aussie 77 cents, I think, is going to be key. While we're above 77, I'm sorry, 77.70. Make sure I wrote that down correctly. I didn't. While we're above 77 cents, it's hard to be too bearish, but I think that's going to be support, right? Because if you break back below 77 cents, this is all the breakout points. I know we talked about this yesterday as well. Kiwi struggling. I mean, look, but it's pretty boxed in. It's boxed in well. You can see the resistance right here, support, previous trend line, right? It's boxed in between 72, let's call it 72 cents and 72.55. Okay. So, and we're going to stay range bound. Dollar Canadian. So the dollar Canadian, notice where we're at. Okay. We're probing this broken trend line. I think we can stretch a little further, especially, maybe through PAL. 126.50, I think, would be it. So, and I'm going to write that down as key. 126.50 is going to be key support. Resistance intraday. I mean, 27.20. Let's look at this spike low here at 127.30. Intraday. We're going to keep us at range. Dollar Swiss. So, here's the dollar Swiss. So the dollar Swiss was a bummer. I'm glad I took off some of it, up here above 90 cents back when I was long through this breakout here. So it doesn't make it super frustrating, but it's a lot like the dollar index. I mean, we haven't negated the inverted head and shoulder pattern, and it stopped where it should have stopped yesterday, but then it obviously continued lower. So now the 78%, hold on really quick, actually. So you have a 78% retracement here at 88.80. $618 comes in a little bit lower. So we'll mark up the 88.80 level. Very big congestion area, but resistance now is 89.20. So unfortunately, we have to go back into range with the Swissy, unfortunately. I know it's no fun when we're in range. US dollar, Norwegian krona. So we broke below, and just so you guys know, I have I put in a pip today because of the low that we created. AB equals CD, lots of support down here. In my opinion, we have to get back above 848 to really start squeezing. And this is where, I've already taken a little position, so I'll be adding above here. 840 is the 88% retracement, also horizontal support. I really just don't think we're going to take out these lows here personally, but with the way the cable's acting, who knows? 840, and it's 849 actually is resistance. So 840, 849. Whoops. Okay. We're going to have to stay in range for now. I think the US dollar, Swedish krona is pivoting off this 50%, by the way, just in case you haven't seen it. Amir said, and Chad, 78 cents. Oh, did I say something? 78. Are you guys talking about the Aussie? Hold on. Sorry, I think you guys are. No. 78 cents is way up here. I think that the 786 and the spike high is that all comes in at 77.70. I'm sorry, guys. I think that's going to be resistance. Okay. I didn't mean 78 cents. I meant 77.70 and then 77 cents of support. Is that clear? I mean, do you understand why? Just want to make sure you guys understand why. So I still think this is a channel, and the channel can be, we could end up being like this, by the end of the day, and then you could be like this and say we're still in a channel. You know what I mean? So I'm not married to the fact that this was the channel resistance. I think we could make it all the way back up to 70 cents based on where stocks are at and how bullish like the NASDAQ is. And by the way, stocks just opened in case you guys are not seeing it. Dollar MEX. So let's talk about dollar MEX. So here we are at lows of the session. We could slump to that 1997 level, which is this area right here, below 201. But I'm going to write down 1997, and then obviously resistance is 2015 today. Okay, so that's the dollar Mexican peso. Let's go over to the US dollar Japanese yen. So one of the things you got to kind of keep an eye on with the US dollar Japanese yen is that I think we made a false breakdown here. Now that doesn't mean we can't find support here at 104.50, but I would be careful at this 104.40 level. This is also a 50% retracement. You can see that this is a big trend line right here. I would be very nervous about being short dollar yen while you're above 104.25. So let's write that down. And I'm going to make 104.25. I believe that's pretty important support right now. I don't know if I'd be bearish here. Resistance 104.85. Ron said, hey, it's only 49. It's not 50 and it's not 60. Happy birthday. Ron, hey, by the way, and that's Cal M in the chat room. We miss you. Where you been? Get in the chat room, dude. I know you're in Hawaii and all, but come on. Hawaii trading. I've always considered it, but man, it's like, okay, you live in Hawaii. Like we had thrown around the idea of, hey, let's live in Kauai at Honolulu Bay, right? And it's in that area, somewhere up there. And but I'm like, dude, I would have to trade all night and do analysis all night and sleep all day. And what's the fun of living in Hawaii when you have to sleep, all day and be up all night? I mean, that doesn't make any sense. But anyway, we miss you, Ron. Come back to us, man. Come back to us. Dollar index. So as I was talking about on the webinar earlier today, this I believe might be a channel. Let's be respectful of the 9. This is the 618, so you can see this fib right there. Okay. Let's be respectful of the 90-12 area in the dollar index. But that low today might have been it. And that low, remember the low happened in Asia, guys, or Europe. This is after that really weak CPI data. I know, a lot of people are probably looking at that going, oh, wow, how come that didn't break? So I'm going to say 90-12 for the dollar index. Okay, and then Hey guys, Stelios may not be able to join us today. He's at the wait. This is weird. COVID has really disrupted a lot of us for many different reasons, but this is the last day of Stelios. His kids had to go to school. Now they're going to be at home, which is another thing in itself. And then, by the way, I'm just going to write this resistance right here because you can see hourly that held. Just FYI. Okay. Then this trend line comes in here, but that's 90.76. So I'm going to write down 90.50 and 90.76. But I'm going to say 90.75 will be fine. And that's here. These are the reasons why, just so I can point it out. And then I'll tell you what I was going to say. So here's the trend line, right? So let's be respectful of that. And then right here, okay, intraday. Okay. Stelios is he's stuck at his daughter's school bus stop because the bus is late due to some demonstrations and in Athens, and so he's out there waiting. So he might not be able to be on the webinar. I'm just saying that, man, COVID's really disrupted those of us that are parents. You have kids that are just at home, and it's tough. Well, both my kids do schoolwork from home. They do school from home. They're older, so they're more self-sufficient, but still, yeah, it's tough. Okay. There's the dollar index. Let's go into gold, and then I'm going to talk about Bitcoin too. And then if you guys have any questions, go ahead and throw them on out here, please. By the way, stocks are coming off just a little bit. The dollar's kind of showing a little bit of reversal here too. So let's go over to gold and see what gold's doing right now. So gold's been off my radar, and I know you guys know that I was focusing on the 38% retracement yesterday, which at 1850, you can see how we pushed above that, and now we're rejecting it. Relative strength is divergent, but I can't, and I think we should pay attention to this resistance here at 1875. I'm not overly excited about gold in either direction, but 1820 being support, 1875 being resistance. Okay, and we're in a range. All right, so let's talk a little bit about Bitcoin. So here's Bitcoin. I think we have to be really careful with Bitcoin and watch it carefully as well, because Bitcoin, I think, is a huge risk asset, and I think it's more sentiment than anything. So, so we should be careful with it, because if it really starts to break, and you can see I have alarms set up on these lows. If we start to break through these supports, and matter of fact, I'm going to go and make sure that let's take a look at Bitcoin really quick on ForexAnalytix. Just take a look at where the supports are here. So we have 4,200, which is good, and then 44.5. So 44.5, and then 4,200. These are the exact numbers we really need to be aware of, because yeah, we go slicing through these levels, and then I think risk off comes after that. So but I'm not saying it's going to happen. I'm just saying that I think it's very representative of risk taking at the moment. And so if we see that come into play, I think it's going to disrupt other markets as well. So just a little heads up. One other thing that I'm paying attention to is for you guys is the Kiwi Yen here. So you'll notice the Kiwi Yen, we hit the 127% extension of this last move lower, and we're challenging the underside of this trend line, and we're not able to break back above that trend line. So now we are at risk of a false breakout on a weekly basis, because think about this. Daily, we closed the week above resistance. Here. We closed the week above resistance here. Let me get rid of this really fast. If we close the week lower, like let's say towards 75, we're at 75.60 right now. If we close, let's just imagine this line turns red. So let me annotate, draw, format, red, draw. So let's imagine this turns red, right? Okay. If that turns red, then we have it's dark cloud cover, potentially could be an outside weak reversal, false breakout, all sorts of things. So I want you guys to keep an eye on the Kiwi Yen. I think it's a good, setup for a reversal. Not saying that we're going to get a reversal, but I think it's something we should keep our eyes on. And let me go ahead and do one last thing really quick, just so I'm paying attention to it. If we get a move back below to the weekly lows here, which would be 75.40, then I think you got to be, looking at a bigger reversal for this pair. Okay. All right. Gogger says, I'm so glad my son is old enough to handle his homeschooling without any help from me. You know what? Me too. That's exactly where my sons are at. They're 13 and 16, and they can, I would be giving Google a gymnastic type workout if I had to help my kids with homework right now. Anyway, I'm making myself laugh. So Steve, how you doing?
I'm good, mate. How have you been?
Good. Stelios, I don't think is here, so I'm going to capture this bias chart right now, and I'm going to post it on our. Oops, yeah, I can do that. So you post it. Let's see here. Yeah, I'm gonna. I'll do that. And how's it? How do you feel about things right now? How do you feel after that CPI data that was released? And I'm going to let you take over the charts, but I'll be here for a second while I'm uploading everything.
Yeah, absolutely. Oh, I don't think it plays any real role. I've been following some things that, in my opinion, give me like guidance for the market. One of them has been copper. I was looking for a potential head and shoulders formation topping if risk assets wanted to move lower, but instead we got this triangle which we've broken out from, both in the price and the RSI. So it's natural to expect that Aussie is going to be, producing one more move, which is about to do so. Kiwi, the same thing. It's about to break higher as well. So looking at all these assets, as well as like the DXY breaking lower from what seems at the moment to be like a corrective rebound, I don't think risk assets are about to roll over. I think we might have one more move higher, and unless we see some type of a divergence. Crude oil as well remains well bid. So I'm looking at the S&P here at resistance. I'm looking at the Nasdaq here overthrowing again and again. I'm looking at the DAX. Everything is stretched, everything is overdone. We see a lot of momentum divergences, but is that enough?
We've said that every day for probably
exactly. Is that enough
years,
to call a reversal? No, because we know that these things can sustain themselves for a decently long period of time before they actually play out. So I think just with an RSI divergence and the obvious feeling that everything is overdone, I think it's quite dangerous to try to fade this market. I think at the very least we need some kind of a big daily reversal, preferably accompanied with some kind of rhetoric that will be able to guarantee that whatever move we're seeing could at least sustain itself for a short period of time, because we've seen 1-2 day sell-offs. But I mean, for a real correction to take place, we need something that will last like a couple of weeks. So until something like that happens, I think you're either long and taking advantage of and profiting of that, or in my opinion, your only other alternative that is prudent is remaining patient. Nothing else.
All right. Well, I personally think that I first of all, let me say that I agree with you as far as the S&P goes, or the market's showing any type of reversal. But also let me state that we haven't, even on daily reversal candles, they haven't produced any type of reversals.
Exactly. That's why I said preferably with some kind of rhetoric change that will be able to feed on that, and produce some follow through.
Yeah.
Because so far, every daily technical reversal, as you very well said, has just found buying, right? Because there is no rhetoric to go along with, why people should be a little bit more prudent, a little bit less complacent, why they should take somewhat of a protection having to do with the possibility of downsides. But everything seems to be living in la la land and believing that there is absolutely nothing that can turn this market around.
Yeah, it sure doesn't feel that way, right? And I mean, I think we're going to have to see some pretty significant levels on the downside being taken out, and for reason, having reason behind
Exactly.
it before we can be convinced at all that that the market is truly coming under pressure.
Exactly.
So what
I'm
else you
paying
got your
attention
eyes
to
on right
this
now?
little wedge here on the 4-hour chart in the Nasdaq.
Yeah.
But it might not really be of much significance. Just like looking at short-term charts and something like actionable in the very, very short term. I think this is what looks more interesting than anything else if somebody wants to really pay close attention to risk assets.
All right. Well, hey, Steve, I'm gonna have to. I have to roll really quick.
Okay, mate.
But I will. I'll talk to you guys in the chat room, and I'll see you for the daily roundup. Don't remember. Don't remember. Don't forget that. And thanks, Steve.
Thank you, mate. Bye-bye.
Bye.
Okay, going back to effects, guys, because I lost the first part. Just to reiterate here, we have two things to take into account in the cable, because I'm paying close attention to it. One is that we finally managed to punch through the 137.40 level since yesterday. But the second one is that this ascending channel is still working for the time being, and we're currently testing resistance. So to be frank, I wouldn't be extremely enthusiastic about the upside just because we broke through this level, because this channel is still holding, and you can see the significance of this channel. I mean, you can see how long it has been, in essence, dictating the path for price action, right? So from a risk reward perspective, I don't think buying here makes much sense. Now, if we do break higher from this channel and we see some momentum building, then I'm going to strongly believe that there's some kind of a big move coming. But until that happens, I would suggest to pay close attention to this area. I think it's rather important. Now, let me see. So let me go through the metals and some other assets, and then you give me any questions you might have. So crude oil seems to be losing a little bit of momentum, but undeniably remains very well bid. Look at the RSI also having broken to higher highs, right? Once again, though, there is no risk reward ratio to buy up here. Natural gas having quite a nice day today. As long as it remains above this channel, as I've said, I don't think you should try to fade strength. Gold still contained within this channel. Silver the same. Different type of channels, one ascending, one descending. they're sending a little bit of controversial messages. So I remain a little bit perplexed of what's going to happen in the short term. Do we have a little bit more weakness in the short term before higher, or we're just going higher? I really can't answer this question based, on the divergences I see between those two charts and the price action. I think it's, I think nobody can say with certainty. Look at platinum though, and don't say I didn't warn you about it. Platinum remains the strongest precious metal at the moment. And I think it's quite clear since we broke through this triangle, which I told you most likely is going to be a continuation triangle. We took out also the confluence of resistances at 1170, and look at the nice 4+% day we're already having today. I think we're on our way to the next objective, which is at 1336. I think platinum remains a very good market and a very good bet. I already showed copper before on its way to new highs. I would be careful from new highs. I think we will need to finally see some kind of a deeper correction, accompanied, of course, when, with whatever risk off we get for whatever period of time we get it. I think it's going to be an opportunity for copper to correct as well. And then we will be able to establish nice positions in all those instruments. So I think this more or less concludes these type of assets. Now, Stelios mentioned earlier, Norwegian CPI data, which didn't, really move the USD NOK. But what remains to be the case is that the recent move, I think, was clearly corrective. We are in the precipice of breaking down to new lows, and I think we should produce a lower low before we likely have, along with everything else, like some, stronger type of, correction before lower again. I've said it before and I'll reiterate it. I think that this high here, and I said it very, very early, I think it might be a generational type of high in this exchange rate in the USD NOK. That's why I felt so comfortable selling NOK and adding. I really believe we're not going to see that price again. Now, nobody can say with certainty, but my gut feeling tells me that that's the case. Look at GMDA. Okay, let me have a look at it. Yeah, you see. Last time we had a look at it, I probably said that, this looks clearly corrective and, it should break higher. It didn't actually break higher, it exploded higher. I mean, look at this gap. From 10 gapped to, what was it, like 14, like 40% higher. So, yeah, I mean, what can I say, mate? Keep looking higher. This is a strong market for the time being. I mean, yeah, quite an emphatic way to make a point here, right? This gap higher. Nickel, yeah, actually you're right. I forgot to mention nickel by looking at these markets. Don't expect anything really different from nickel. Nickel remains very well bid. It seems to be breaking above this triangle, but keep in mind we also have this channel. We're very close to that. So, remains very well bid. Some momentum divergences are quite obvious here. Same deal with copper. Very strong bull market, but I think it's overdone. And I think the next decent move is going to be to the downside and not to the upside before we can have a appealing risk reward to buy this type of markets again. Because I do think that in the long term, these markets will continue on their way higher. I think that copper is going to, in this cycle, produce all-time highs. Nickel. I know that a lot of people find that, like science fiction. And I know it's not easy, but I wouldn't even rule out eventually new all-time high in crude oil. And I know that for many people and for fundamental reasons, it seems like, a crazy scenario. And I'm not talking, of course, having to do with crude oil about this year, right? I mean, it would need a lot more time to do something like that. But precious metals, anything tangible, I think during this cycle and during this decade, they're going to be hitting higher highs and higher highs, on an annual basis. That's what I think. So, any good corrective move lower, I think will produce a very good buying opportunity, especially if you have like a mid to long term horizon. Somebody's saying he doesn't get any sound, which I'm assuming that's his problem since nobody else has complained. Let me type the answer. Everybody else can hear us. Check your sound settings. Okay, I sent a message. So anything else, guys or girls? Any other requests for a specific market that we haven't already talked about today, among Blake, myself, and Stelios and whoever else was here? TLT, yeah, absolutely. TLT, here it is. Haven't had a look at it for quite some time. Last time we had a look at the TLT specifically because I look at other instruments. We were there, and guess what I said back then, which you know me by now, that this move lower was purely corrective, and the next move should be higher. Guess what? Yes, it was higher. Now I'm going to tell you this thing once again, meaning I think that this move lower, albeit rather prolonged, doesn't have any impulsive characteristics. So I think there is a very, very decent chance that eventually this move is also going to get resolved to the upside, right? So pay attention to this channel, in my opinion. Channel will be your guide. URNM. Let me guess, that's uranium, right? And the answer is right. It's a mining company for uranium. I mean, such an easy buy in some occasions here. Which were those? One was this textbook pennant, and the other one was this textbook pennant. So higher and higher and higher, and as we said, with anything that's tangible, at some point it should have some decent correction lower, and you can see the RSI divergence. It's quite huge, right? So let me be very clear. I'm not saying buy this today, right? If you bought it at the breakout here, that would have been an amazing entry, in my opinion. I mean, buying it at the close of that daily candlestick above the pennant, that's a nice trade. Buying it up here, you might make money, but where's your risk? Down there. That would imply that you're hoping that your minimum potential reward is up there. But there's no guarantee for that. You know what I mean? So you should wait again for some type of a technical formation that will look like a bullish consolidation, something that will tell you that the stock is, the ETF in this specific scenario is consolidating its recent gains before producing another high or correcting its prior gains, right? So buying it there, buying it here, amazing entries. Now, who knows? Okay, so thank you all. See you again tomorrow. Any questions you have, we're here to. I did cover GMDA, didn't I, mate? Didn't I? Not today. I did. I showed this market. I talked about the gap higher, 40% gap higher. So I said it has now broken through this formation. So Sorry, I don't understand, mate, what you mean. We did cover this today. I mean, we had this corrective formation and it has clearly broken higher. So, I think it remains a very, very strong market. Okay, guys, have a wonderful day. Bye. Upside targets for this, it's not that easy. I'll tell you why. One upside target for this is the high, obviously, right? Which we're not far away from. So we did touch this area. And then in order for you to find other upside targets, since we've already exceeded extensions of the smaller corrections, you have to take this whole range and extend it. So I would say 19 is the 127% extension. That's the next upside target if we go through 15.5. So 15.5 and then 19, almost $19. Bye bye, everyone. Ciao.